Hi, welcome to another video on the analysis of small cap company. Today we will discuss Aegis Logistics Limited. Aegis Logistics basically started as a small logistic company, but today Aegis Logistics manages the logistics of LPG, oil and gas, petrol oil and lubricants, and liquid chemicals. It sources, it stores, it bottles, it has got supply pipelines for all the petrol oil and lubricants, chemicals, and the LPG. The company also operates as a storage facility for both import and export of LPG, oil and gas, and chemicals. This company has got storage facilities at all the six major ports in India, which includes Navi Mumbai, Mangalore, Kochi, Gujarat Pipavav, Haldia, and Kandla ports. Coming to the business of the company mainly operates in two niche businesses. One is the LPG segment. The company procures LPG and it stores, it bottles, and it distributes LPG. The company has 142 auto gas stations in 10 states. It has got 37 bottling plants in 15 states, and it has 290 LPG distributors in 140 cities. The company has a storage facility for 119,000 metric ton of LPG static, and the throughput is around 96 lakh metric ton annually. Let us understand the company's business expansion. Initially, the company in 2021 entered into a joint venture with Itochu Corporation of Japan in order to procure LPG at a very competitive price and of good quality. This aspect is handled by Hindustan Aegis Limited. The company also entered into a JV with the Royal Vopak of Denmark. This is a company which is a market leader in establishing storage facilities and cryogenic technology. So the company diluted its stake, and the joint venture Aegis Vopak Terminal Limited has Aegis Logistics having 47% stake and the Royal Vopak having 42% stake. So the Aegis Logistics still holds majority stake in the company. This AVTL basically handles all the storage handling of LPG, oil and gas, and chemicals in the six major ports we just discussed. The company is a small cap company with a market cap of around 48,000 crore. It has a price to earning ratio of about 40 and price to book ratio of about 8 to 8.5. The debt to equity ratio of the company is around 0.7. But when it comes to the revenue of the company has been static over a period of time. And similarly, the operating profit margin is somewhere around 12 to 18% over the past 5 years. However, the free cash flow to the firm has been quite volatile since 2021 to 2025 because the company entered into a joint venture with Itochu Corporation Japan and also with Royal Vopak of the Denmark. However, the free cash flow to the firm has been quite positive and encouraging. The main strength of this company is its storage infrastructure, which it is holding in the six main ports of India. Secondly, it has entered into a joint venture with companies like Royal Vopak, which has got a cryogenic storage technology, which they can install in India also. It has also entered into a joint venture with Itochu Corporation to obtain LPG at competitive prices. This sector is basically a very high entry barrier sector. Now coming to the weakness, this company basically operates in LPG, which is a commodity. Commodity prices are usually very volatile, which gets affected even by the currency movements also. It is in the advanced stage of acquisition of TriStar Limited, which is another logistic company in UAE. But we have to see how this company is going to manage funds to get this company acquired for $1.5 billion. Now, what are the opportunity? Oil and gas sector and LPG sector is a very niche sector, and the demand for oil and gas and the LPG is going to increase in future. Presently, this company is trading at 1400 and it has appreciated by about 60% in the last 6 months. So we can generally conclude that whatever the positive factors the company had, that has already been factored in stock price, which is presently trading. Any future acquisition of TriStar may unlock further value in this company. So this is about Aegis Logistics. Please put in your comments what do you feel about this company.